Welcome back. Gerald Moser joining us, Chief Market Strategist at Barclays, to decode really the outcome of the elections, the kind of impact that's likely. Gerald, thanks for joining us. Let me first get a sense from you on really how things are looking at this point. We've seen markets really just hover on tenterhooks ahead of this election outcome. It's been highly anticipated.
Yes, no, good afternoon. I think it's the most important event of the year, of course, excepting COVID. And it is something that everyone was aware of. It's not a surprise. And I think, as you just said, most investors are waiting. No one wants to commit to an outcome because the uncertainty is too big. Memories of 2016, when there was an upset with the polls, are still quite fresh. And I think because of that, you've seen the market, you didn't get any buyer last week. When you had the sell-off, you had a sell-off across assets. You had a sell-off in equities, a sell-off in gold, a sell-off in fixed income. I think people don't want to position themselves ahead of the election. They probably want to wait for the outcome before committing money one way or another.
Okay, what are the major implications for markets should Biden come to power vis-a-vis Trump? What do you think markets are leaning towards?
Well, I think the markets are already starting in a way to price a potential victory of Joe Biden, and also more broadly, the Democrats also potentially winning the Senate. You see that if you look at the performance, for example, of renewable energy ETF, they've done incredibly well this year. Of course, it's partly the focus on the climate change issues, which is anywhere relevant regardless of the US election. But I think clearly you've seen, especially in the US, a focus on the potential companies that could do well if you see Biden and the Democrats win over President Trump. But we have to keep in mind that those elections are only really relevant in the short term. If you look throughout history, over a 1 or 2 years horizon, it doesn't really matter who gets into the White House or which party will win the Congress. Overall, it's the economy, it's what's happening at the company's level that will matter more than who is going to be the next president of the United States.
Absolutely. In terms of global markets as well and how they're placed, I mean, India, of course, has been concentrating more on domestic triggers at this point, but just waiting for any uncertainty around the U.S. elections to pass. Do you see any major implication for emerging markets?
Well, I think what you described in the case of India is something that is broadly true. I think we've seen a reversion of globalization over the last decades, over the last 2 decades. You've seen a world that has become more and more integrated, where companies would be selling and producing abroad. But with the uncertainties that we've seen in the last couple of years around globalization, there's been a broader focus on domestic side. This is also something very relevant in China. We see that the Communist Party, as part of the 5-year plan, wants to increase the domestic part of the economy. And I think it's something that will continue to be also the case for most of the emerging market. I mean, some part of the emerging market, the one that are the most relying on commodities, cannot really afford to just focus on the domestic side. They need like a broad worldwide economic recovery for the economy to strive because of their dependence on the commodity side. But I think for countries where it is not the case, such as India, I think you will continue to see a focus on the domestic part of the economy.
Give us a sense as to what are some of the uncertainties that are currently prevailing in the markets globally that could potentially be addressed by a Biden victory?
Well, I think the main issues remain COVID and the second wave. As you know, in the Northern Hemisphere, we're now going into winter, and we've seen in Europe several countries or governments have decided to reinstore some kind of lockdown. We see also the total cases in the US that keeps on breaking records day after day. So I think again, the U.S. election has put a brake into the fiscal stimulus in the U.S. Congress and the White House couldn't agree on a fifth coronavirus relief bill. But I think the US election, when it will be behind us, we'll see some kind of fiscal stimulus. Now, the timing of it will depend a bit who's going to win. I think if you have President Trump that is, for example, re-elected, and we stay in the same state in Congress, i.e. the House with the Democrat and the Senate with the Republican, probably that the Democrat in the House will want to find then an agreement with the Senate, and we probably get a fiscal package that will be smaller than what the Democrat wants, but still nonetheless some money flowing through the economy. If you have a presidency with Biden, I think then it might be that the fiscal package is delayed after he swears office at the end of January, but then the package is probably going to be bigger. I think ultimately what matters right now for the market is the economy. And regardless of the outcome of the election, removing the uncertainty of it is the most important. So the worst outcome would be a contested election that drags on for weeks or even a couple of months, because that would still lead the market to not making strong decision on the investment side, because you still have that uncertainty lingering.
I just want to understand, are you pricing in perhaps a delayed or a contested election outcome, and what would be the potential impact on that? Would we brace ourselves for some sort of a major sell-off, or do you think it would be very short-lived in nature?
Well, I think it would be a volatile environment. That's the highest conviction we have around that. Now, if you look at the poll, and I think my view on this is as good as yours. I'm just looking at the different polls, the statistics around it. It looks like the Democrats are ahead by more than it was the case in 2016. Also, we should bear in mind that already 100 million Americans voted. So, when we talk about election day on Tuesday, you're only going to see 50, 60 million voting. So a majority of Americans have already voted. We need also to keep in mind that the amount of uncertain voters, people who don't know who they're going to vote for on the day of the election, is much lower than it was in 2016, which is something that speaks in favor of the polls not being wrong this time around. But so the leaning, it all seems to be that it's going to be a Joe Biden victory. But of course, it's going to be for the electors in the United States to decide that. When it comes to the market, I think if we have a contested election, it's going to be volatile as long as we don't have a decisive outcome. And that could be probably a few weeks, unlikely to be more than a couple of months. But that's something that we should be ready, and would mean like Q4 could be quite tricky in the market. It's not the main assumption based on the poll, but it's still one outcome that we can't completely ignore.
Okay, what about the dollar, Gerald? What's the impact, either way that you feel this may have on the dollar? Because that'll be critical to watch as well.
No, absolutely. And I think you're right. We've seen the dollar coming a bit under pressure over the last couple of months. And we've seen that the Fed is really committed to keeping the rates low for long. We're now talking 2023. And I think both candidates have an agenda that would trigger more debt for the United States, either through more fiscal stimulus, some more corporate tax if it is President Trump. So I think there the outcome is maybe the same for different reasons. And I think our view is that the dollar should not move dramatically, but overall should probably move towards more weakness than strength over the next 12 months. Of course, if you have uncertainty, we have to remember that the dollar is seen as a bit of a safety currency. And if you have like the contested election we're talking about, you might see a bit of strength in the dollar. But once we have the outcome again, I think the trend would be probably for a weaker dollar rather than a stronger one.
All right, well, just another 24 hours or so, well, a little bit more, but to find out which way we're headed here. And really what we could anticipate in terms of a market reaction as well. Do you think perhaps, the fact that we saw that rising case count just as people were going in to vote in the US will also play a part? Gerald, I'm just asking out of, not from a strategic point of view, but just in terms of sentiment, do you think that perhaps may have played a role in tilting things at such a last minute?
Well, if you believe the polls it had, it's something that clearly was probably not very supportive for President Trump. And I think also it's something that led more people to vote in advance, which means you couldn't have like a last minute change of mind or developments in the last few days or even week that would have influenced the voters, like what happened, for example, in 2016. And in that case, I think the COVID-19 definitely played a role in that election. Absolutely.
Thanks so much for joining us. Great to have you with us and, sharing some insight on really what markets are anticipating from this election outcome. That's all we have time for on the show today. Thanks so much for watching.